Good morning. My name is Taylor Randall. I'm Dean of the David Eccles School of Business at the University of Utah. It's my pleasure to welcome you to the third installment of our series, Navigating COVID-19, How to Save Your Business. These seminars are being brought to you by the Mariner S. Eccles Institute of Economics and Quantitative Analysis. They're also an intellectual collaboration with Levitt Partners and the Cynosure Group. They're being broadcast throughout all the state to all small businesses and beyond, thanks to a gracious donation from the George S. and Dolores Dory Eccles Foundation. We're also grateful for the partnership of the Governor's Economic Task Force and the Salt Lake Chamber of Commerce. Today, we're going to be talking about Federal Reserve actions, what they mean for us in our macroeconomy, and how it can relate directly to your business. We've got a spectacular lineup of business owners and business leaders that are going to help you guide you through this crisis. It's now my pleasure to introduce to you Spencer P. Eccles, one of the hosts of our show today. Spencer, over to you.
Thanks, Dean Randall. You know, it seems so appropriate that today's effort is launching through the Mariner S. Eccles Institute for Economic and Quantitative Analysis here at the David Eccles School of Business. You know, nearly 100 years ago, Mariner Eccles had to navigate and lead through another time of economic peril, first as a business leader, and then as chairman of the Federal Reserve during the Great Depression. His description of what he felt at that time, I believe, reflects the sentiments that many of us are feeling today. And I quote, "During 1930, I awoke to find myself at the bottom of a pit without any known means of scaling its sheer sides. But you know, just as Mariner successfully led his companies and the country out of the Depression, we too can lead our families, our communities, and our businesses through this health and economic crisis, and importantly, back to strength and prosperity. As a family and under our father's leadership and through the George S. and Dolores Dory Eccles Foundation, we felt it imperative to help the business community where we could. Joining together with Governor Levitt and Dean Randall and drawing on the deep expertise of the Mariner S. Eccles Institute at the University of Utah, a series of discussions have developed to help business leaders, large and small businesses, receive actionable, timely, and important information and a framework to help navigate this immediate crisis, as well as plan to get through to the other side. You know, we're fortunate to have Governor Mike Levitt, the former Secretary of Health and Human Services under President George W. Bush, leading this effort. And while at HHS, Governor Levitt developed a comprehensive pandemic plan for this country. His experience and leadership, coupled with the Mariner S. Eccles Institute's expertise and other boots on the ground experts, will give you the much needed strategic and practical tools to navigate this challenge, and importantly, to rebuild your businesses and our community. Governor Levitt.
I just want to, was I muted?
Yes, sir.
Okay. So good morning again. I come to you again from my appropriately social distance location for the purpose of continuing this discussion. This is the third discussion in a series. And my purpose today is to talk about some of the matters that we've talked earlier about to give context, and then we have a featured guest, Randy Quarles, who will give us insight into the world of finance. So if I could there'll be a slide that comes up at this point, with any good luck, that will list 5 of the things that we have learned. The first one is the importance of seeing this as a longer term conversation. Those who see this as a one and done 3-month kind of an episode in our lives will be disappointed, because we're dealing with a virus that is part of the natural world. That virus will continue with us for a time. We are doing important things to contain it, to minimize its impact, and as we move forward, we will likely have an opportunity to learn to do this as a matter of skill. It's a new risk that we need to learn to manage in our lives. We have talked at length about the need to move rapidly, recognizing that there is urgency here, that we don't know everything that is required, but we can make decisions that are directionally correct. And if we're moving in a way that is directionally correct, we can iterate quickly, and we'll get to the point that we are making correct decisions as we go. We've talked about the importance of the relationship we have with our credit facility, with our banker, and with others. We've talked about important opportunities that the government has provided for us to have financial support and assistance. And we've talked about the importance of keeping track of our customers. So with that summary, it's my great privilege to introduce Randy Quarles. And Randy, it's a delight to see you appropriately social distanced in your home. And I think your home is in Salt Lake City or in Utah. And that may come as a bit of a surprise to some to know that Randy Quarles, who is the vice chairman of the Federal Reserve Bank board and is the supervisor of banks and chairman of the response board, has a home at least in Utah, and you have a Utah background. And Randy, I think that will please people greatly to know. Tell us a bit about you and your life in Utah before you became vice chairman of the Federal Reserve Board.
Well, I am a Utahn and was raised in Roy, Utah. Went to Roy High School. Went back east to go to school, to college and law school, and although a lot of my career, the bulk of it really has been in New York and London and Washington, I always maintained a home in Utah. In fact, even when I was a very young lawyer on Wall Street, I would catch the last flight out of New York on Friday night to come home, and the last flight back to New York on Sunday night, because this is my home, and I'm a Utahn very deep down.
So a graduate of Roy High School, you went to college in the East. You've had a number of government service roles prior to your current one, and a business career. Talk a bit about that.
Yeah, so I've spent I've spent time both in public service and in the private sector. And in the private sector, I've spent many years as a private equity investor, both at the Carlyle Group, which is one of the largest private equity firms, obviously, as a partner there, and then with partners here in Utah with a private equity firm.
Well, I feel confident that must weigh into your experience as you deal with matters of such importance, actually affecting not just the economics of the United States, but the entire world. As you look back on your career as a business person, leading businesses, smaller and larger, has that been an important perspective for you?
It's certainly, and certainly in this context, when we are sort of in the middle of a crisis response that's been brought on by the governmental response to the coronavirus and the need essentially to close down the economy, understanding how that affects business. It's not simply an intellectual exercise or really even purely a financial exercise. It's an economic and exercise that has human consequences, is something that I think we always have to keep in mind when we're working on this in Washington.
So could we talk a bit about your job? I'm not sure everyone understands the Federal Reserve, may not understand what the Vice Chair for Supervision does or as a member of the Federal Reserve Board of Governors. Talk a bit about the way, what your day-to-day role is, how it affects the economy, and what impact it might have on those who are watching today.
So that's perfectly understandable. There aren't, we have a very complex central bank. Oh, good Lord.
This is just to prove that we're live and spontaneous.
sorry, we have a very complex central banking system in the United States that is, in fact, a system. There are 12 reserve banks in different parts of the country, and the operations of those banks are governed by a board of governors in Washington. There are 7 governors, a chair and 2 vice chairs, and 4 additional governors that set the policy of the system. And essentially what the central bank does, and the responsibilities of the board of governors, are to determine monetary policy in a way that is designed to achieve the twin objectives of maximum employment and low and stable inflation and moderate long-term interest rates. And then we also regulate and supervise the financial sector. And then in times like these, we're responsible for crisis response and providing liquidity to the financial sector and credit even into the real economy.
So, Randy, people often talk about fiscal policy and monetary policy, and it seems evident that you have a hand on both wheels. Could you talk a bit about the difference in your mind and how those tools can be used at a moment like this?
So fiscal policy is, are the taxing and spending decisions of the government. And those decisions are really in the hands of the Congress and the Treasury. We work very closely with the Treasury in most circumstances. But the decision of how much to tax, how much to spend, what to spend on, those are political fiscal decisions that the Federal Reserve Board, all of us are appointed, none of us are elected, those are really appropriately left to the Treasury. Monetary policy is the decision about what the level of interest rates will be, what steps should be taken in order to maintain a low level of inflation in the country. And for good reason, the country has decided that we want to insulate those decisions. History has shown us that we should insulate those decisions as much as possible from politics. And so you have this apolitical system that's designed to make those monetary policy decisions.
Well, we are clearly seeing a moment in time when both fiscal and monetary policy are being used as important tools to revitalize this country. I have observed when a person has heart surgery, the doctors will often reduce the patient's temperature quite rapidly so as to give them the best chance to ultimately survive. It seems a bit counterintuitive. With COVID-19, for health reasons, again, we have dramatically reduced the economic temperature, if you will, of the country. And we've done it in the belief that this will pass and that we'll remain healthy and be able to go forward. A lot of us are worried about what that outlook might look like. What will the recovery look like? Will it pop back? Will it be something more likely to come back more slowly? If you're planning in a business, you need to have some assumptions about that. What would you have us factor from your point of view?
So obviously you have to begin from the fact that there's a great deal of uncertainty about how the course of the virus will evolve, and therefore what the course of the containment measures will be. We have that uncertainty at the Fed as we chart our course, and any business is going to have to begin from that fact as well. That said, there is, given the nature of this shock, there is every reason to believe that we come out on the other side of this with an economy that is essentially unharmed. Given the analogy that you used, I mean, this has been placed in hibernation, its temperature has been brought down, but that it can be revived without permanent damage. And the measures that we have taken in conjunction with the Treasury and additional measures that the Congress has put in place are designed to ensure that period that the hibernation period we can go through with the least amount of permanent damage. And I believe that we will do that. So as a business planning for the future, you should expect that the economy, when it comes back, it can come back robustly. There's just the material amount of uncertainty as to exactly when we will come out on the other side.
Well, that's very helpful to hear you say that. You mentioned the fact that part of the job that you and your colleagues have is to actually serve as an instrument of liquidity in times of crisis. Again, as fiscal policy, we have seen the Congress enact a $2 trillion fiscal stimulus package, and already there's talk of another package. There's a lot of government agencies, including the Fed, that have been tasked to provide loans and to distribute very large sums of money, almost unthinkably large sums of money in a very short time, in a way that there really isn't a lot of infrastructure to do at this point. We're often kind of building a new system here as we go. Can we execute on this? When do you expect that the funds will actually begin to flow?
So yes, I think we can execute on this. And one of the main reasons is that we have the ability to use a strong banking sector as essentially the distribution channel for much of this. The financial crisis of 2008 had a different genesis, and there were different problems that needed to be solved. The genesis there was that you had an over-leveraged and undercapitalized banking sector. A variety of weaknesses were exposed there. Many of the measures that were taken after the crisis have ensured that both given the different cause of this crisis and the much greater capital and liquidity of our banking institutions, that we're in a position to use that system as both a significant source to satisfy the expanded credit needs, and as a distribution system for the credit support that's being provided through the Fed and through other governmental programs.
Well, just yesterday, now turning to monetary policy again, Chairman Powell announced up to $2.3 trillion in new funding. It's a new funding facility that is on top of the other quite extraordinary measures that have been taken. I think we have to acknowledge that the financial instruments of this country are being brought behind recovery. What are the objectives of this second tranche, this action by the Federal Reserve, and how do you think the policies will affect the economy?
So there have been a lot of actions that we've taken at the Fed over the course of the last few weeks, and it can be difficult to keep them all straight. I think it's helpful to think of kind of three categories, three areas where we're trying to provide support. In the first instance, we needed to return liquidity to markets. The nature of the shock had caused a lot of uncertainty about what the value of assets were, and therefore in readily tradable markets, there was uncertainty as to what the right prices for exchange were, and that caused a lot of markets to seize up. We were able, so a number of the initial facilities that we created were designed for us to provide liquidity into those markets, either through banks or through direct purchases of certain assets. And I think that they were effective in restoring that liquidity. The second phase of the response was to provide necessary funding. Some of that was as mundane but important as ensuring that funds were available at all the banks through the country for the amount of cash withdrawals that were being made. Some of them were as global and international as ensuring that dollars were available throughout the world for the demand for dollars that arises whenever there's a flight to security. And so the second sort of tranche of measures that we took were designed to address those funding needs. The third tranche of measures, third category in which you can look at various steps that the Fed has taken and will take, is credit support. Because of the nature of this event, you have a basically strong economy that has been closed down for a period, And during that time, the participants in that economy are going to have a variety of significant credit needs. Some of that can be handled through the private sector banking system as they expand their balance sheets to respond to that credit need for their customers. But some of that will come through facilities that are established by the Treasury and the Fed together in order to supply that credit. And the way that works is that the Treasury takes a certain amount of appropriated equity. The Congress gives it a certain amount of funds for this purpose. They put that into a facility, and we at the Fed then leverage those funds to increase the amount of dollars that are available for the purpose, for the congressionally mandated and Treasury executed purpose. And then we're using the private sector banking system as the distribution channel for that extra support, and it can be quite sizable.
So, Randy, there are roughly 1,000 or more Utah business people in participating in our discussion today. Many of them will have actually applied for the payroll protection in the small business category, or they will be potential recipients of the or beneficiaries of the 2.3 coming through the Fed. You've indicated that those tranches of money have been put into the top of the pipe and they're working through the infrastructure. There are folks waiting at the end with anticipation. When do you think they can turn that spigot on?
So, so the PPP, obviously is starting, and some funds have been distributed. At the Fed, we're providing additional support to that program in that we have announced a liquidity facility for the PPP. Although we don't directly distribute the PPP funds, in part because they're designed to be to ultimately be forgiven, to be direct support if the conditions are met. We can create additional capacity there by providing a liquidity facility for the PPP, and we've done that. Our direct facility, the Main Street Lending Facility, which we've created in connection with the Treasury, we are putting together the mechanisms for that credit to be distributed through the banks. That's probably a 2 to 3 weeks away, a couple of weeks away. The difference between our facility and the Main Street lending and the PPP is that this is designed to complement the PPP. It's targeted at the mid-sized companies as opposed to necessarily the smallest companies, although companies will be even small companies can avail themselves of it if they want to. And these are loans. The statutory framework under which we operate requires us to make loans to creditworthy companies that we believe can be paid back. And so the framework that we're putting in place is designed to ensure that.
So when we went through the financial crisis and there were instruments like this created, and there was an expectation they would be paid back, taxpayers were ultimately made whole and in many cases actually made a profit because they were able to secure those loans with stock, which had been was trading at a very low point at the moment that the loan was affected, and at the end of the day they had recovered in their stock quite nicely. Could you talk a bit about the terms of who sets the terms of loans like these, and do you expect that there may be a discussion like that with firms who are in fact looking for help?
So the terms are described in the facility that's been created, and the Treasury and the Fed together determine what the appropriate terms are. Related in there is the question of how much leverage will the Fed provide for a particular amount of Treasury equity, and that discussion necessarily depends on, well, what do we think the terms are, and how likely do we think that means that the loans will be repaid, and that the Fed will ultimately incur no loss on them. So the particular sets of terms that you've described have not been part of the discussion currently. There are a variety of measures that you would expect to be in the facility, the Main Street lending facility. Some of them are part of the law. Some of them were strongly indicated by the law, and again result from a discussion between the Treasury and the Fed as to how we think this facility can be most effective, while nonetheless ensuring the greatest amount of repayment.
I'm going to ask this question only because it's relevant to the time. Under the PPP or under the stimulus package, that was clearly done as fiscal policy, and direction was given to different departments of the government, one of which would be Treasury, to write regulations that would fill in some of the blanks on how these programs could actually be adjudicated. For example, on certain parts of it, I think there's expectation that the rules will be actually extended or advertised today. As I'm unacquainted, but I think our fellow listeners would be interested to know, once the Fed makes a rule that way, do they define their own rules in terms of the way the program is actually adjudicated, or does it come from some other body?
So the sort of supervision of the distribution of the Main Street lending facility will be subject to the framework that's established by Congress, but it will be principally the Fed that will supervise the banks that are the distribution channel. So the Congress sets the framework. The Treasury is the political actor that determines the use of the funds. The Federal Reserve serves as the leverager and the interface with the banking system, and then supervises and regulates the banking system and the distribution of the funds.
Summarize what I've learned from you today, it would be two basic tools, one fiscal, one monetary, both about $2 trillion. The first one being aimed at certain specific sectors, and then some for small businesses, and those are the payroll protection that we're working for, and those are 500 employees and under. The second facility would be, again, $2.3 trillion. You specified the three purposes that they were being made. One was credit and funding and liquidity, all three of those very much monetary. But primarily focused on mid-cap funds or firms, which we would likely think of as about 500 or over, and that they would both be accessible through lending institutions. Have I summarized that adequately?
Yeah, I think that's a good framework for thinking about what's happening.
So, and my sense is that this obviously is not the first financial crisis that the Fed and have led us through. My sense is that with this one, however, the banks are in dramatically better condition than they might have been in 2008 and 2009. Much of that has come because they had a lot of new capital infused. They have a liquidity cushion that you've been working to develop. But suddenly, conditions have changed. You've been in the middle of pressure testing banks, I think, to assure their solvency. Banks and financial intermediaries are critical conduits. So give us some of the sense of the condition you think the banks are in right now, and where are we going with this task of pressure testing?
So the banking system is quite strong currently. Capital levels are more than twice what they were in the run-up to the financial crisis of 2008. The quality of the capital is higher. Liquidity at the banks is much stronger and much more of a focus of our supervision on them. So while this is obviously a stressing event on the system, it's a system that goes into it much stronger than in past periods of financial stress, which, as I'd indicated earlier, is what allows us to use the banking system as the distribution channel for much of this government support to the real economy. We're clearly continuing to monitor how that develops, as much of that will be dictated by how the governmental response to the coronavirus develops and how long the economy is shut down, and what that means for the evolution of the financial sector. But but they begin from a very strong place.
That's, I think, a very positive thing for our economy. And while we're on the topic of banks, I mentioned stress tests. I know banks are intensely interested in this. You said that you're going to continue stress tests, but that clearly they need to be changed in the nature of the way you're approaching that. Could you elaborate on that a bit?
Yes. In the regular order, stress testing of banks proceeds by our announcing a scenario early in the year of a hypothetical financial stress, and then we determine how a bank's portfolio would respond to that hypothetical stress and whether their capital levels are sufficient to allow them to continue to support the real economy through that stress. We're going through an actual stress currently. Some countries in the world have therefore announced that they have suspended their stress tests. I think the right thing to do is for us to continue our stress tests, but as part of them, to analyze how banks' portfolios are responding to real current events, not just to the hypothetical event that we announced earlier this year, and to use that analysis to inform determinations we make about the regulation and supervision of the financial sector, which is what we're going to do.
We've talked a bit about banks and those that are directly regulated, but I'd be interested to get your thoughts about the non-bank side. As you said, the banks are stronger than they were a decade ago. What about the non-banks?
Well, I think the liquidity intervention that both the Fed and other central banks around the world conducted earlier this month, or earlier last month, I guess, have been effective in restoring function to capital markets and to the non-bank portion of the financial sector. It's still under stress, but it's doing its job. I do think that sort of these events, coupled with some of what we saw in the financial crisis of 2008, would lead us as the dust settles here to think about whether we have the right macro framework around that portion of the financial sector, because of the significant amount of intervention that was required at the outset of this event.
Well, I'm going to close with a question that's really draws on your previous experience. You came from the private equity world. You were an investor in many companies. You've operated smaller and mid-sized businesses, and you've clearly well acquainted with large businesses. Based on your experience as a business person, what kind of advice would you give to those who are struggling right now to save their business right now?
So I think the first piece, the first thing I'd say with respect to that is that there is, to go back to something that you and I had talked about earlier, there is every reason to believe that the economy emerges from this in a strong place, that we can have a robust recovery, and that the business that you are running or are part of can pick back up and continue in a robust economy again, and in a relatively near-term period. I think because of the uncertainty that surrounds the evolution of this situation, the evolution of the virus itself, you should make conservative assumptions around the timing of events in the near to medium-term future, but they shouldn't be pessimistic assumptions about where we are at the end of this, and they should be made understanding that there is a enormous amount of support already announced and available from the Congress, from the Treasury, from the Federal Reserve, and you should be looking to take advantage of those various programs, which are designed to ensure that we get to the other side of this hibernation, as you've described it. If we do all of that, then I think that this can be a very positive result for everyone, and I would be looking at the future in those terms.
Well, Randy Quarles, I would like to express two things to you, I believe, for which I speak for everyone participating. One is that we're grateful we live in a country that has the capacity to step up when there is a need and to provide a sense of calm and to provide a means by which we can move forward. And to you and to your colleagues in the Fed, we express appreciation for your service. And finally, I will say, just as a Utahn, how proud we are of the contribution that you make, not just to our state, but also to our country and the world. Randy Quarles, thank you for spending some time with us.
Thank you. Thanks, Governor. Good to talk to you.
So back to you, Spencer. I think we're going to now have a panel, aren't we?
Yes, Governor Levitt, thanks, and thanks also to Vice Chair Quarles. I think now an opportunity to kind of dive into a number of businesses and make sense of what Randy has talked about here, and how does that translate into our business. And our first person that we're going to talk to is going to be Clark Ivory, who's the CEO of Ivory Homes and #1 home builder here in Utah for over 30 years. And they employ 300 people of 3,000 trade professionals, but importantly, has a breadth of experience under that, including serving as the chair of the Board of Trustees for the University of Utah. But I think very relevant to this particular conversation, and will help us navigate through kind of the higher level understanding of what the Fed is and what it does and what it has done up to this point with this largest stimulus and almost in the fastest period of time in the history of our country. Clark was he was on the Federal Reserve Board out of San Francisco from 06 to 11. And on the Salt Lake City branch, he served for 3 years as the chair. But importantly, think about those dates, 06 to 11. And I will just say, of all the people that I know, he's the only person that I know that actually called the downturn going into 08 and 09. And he'll be able to reflect a little bit on that. So Clark, why don't you tell us how we can save our businesses here and navigate through and vision through to the future?
You bet, Spencer. I just thought I'd wear this mask just in recognition of what a great job the Eccles family is doing, and also Taylor Randall at the University of Utah. I'll take it off just long enough to give my part, but I truly appreciate the opportunity. I want to let you know that there are great things going on at the University of Utah behind the scenes to help the state. And Governor Levitt is right in the middle of it, and we're very appreciative of him and the fact that he has an experience base in this very area, having served as a Secretary of Health and Human Services and having dealt with other pandemics. I'm very grateful to Governor Levitt, who was Secretary Levitt, who's leading us out, as I am also grateful to Randy Quarles and all that he has done and continues to do. I listened very carefully yesterday to the Chairman Powell's, press conference, which was at the Brookings Institute, and it was just him getting questioned on a number of things. And when I got done with that, I have to say I had so much confidence in the leadership behind the Federal Reserve. Truthfully, I think Ben Bernanke did an incredible job during the last downturn. But what is going on now, I think, shows a Federal Reserve that learned that they needed to act quickly and decisively and early, and they've done that. They've done it so well, and I'm so appreciative of their efforts. What a great thing to see all that is rolling out so quickly, and the way they're cooperating with Secretary Mnuchin. I think it's amazing. The fact that we had $350 billion for small businesses, and that's quickly grown to $600 billion, with the Fed giving the backstop until we can get the additional stimulus passed through Congress, lets all of our businesses know in Utah that they're going to be okay. They can still move forward and apply for the PPP. They can still get that economic disaster loan from the SBA. And that's a big deal. I want to just now turn to a slide that sort of helps me explain what happened in the last downturn and what we did to sort of be prepared for that. And if Andrea could put that up, it'd be helpful. The very first thing I think that we have to realize is that these battles, even though I hope Randy is right, we're going to see a snapback and really see a strong bounce after all the stimulus comes through and we get some of these healthcare issues under control. I think we have to sort of plan for a longer term. For me, the last financial crisis was a 6-year battle. And it started in 2006 when I went on the Federal Reserve. It just was fortunate that I was asked to look at housing markets through the Western US and report to Janet Yellen, who was the president of the San Francisco Bank at that time. And every time I sent her report, I was sort of so nervous watching the supply of housing and the number of speculative purchases that were going on, particularly in the Western US, that I voiced loud and clear to the Federal Reserve that I thought this was a problem waiting to become a disaster. And in fact, we know that it did. But the difference between that time and now is that we had a substantial amount of time to sort of figure it out. There were clear warning signs. And it became very, very obvious to many, which gave us a chance to sort of look at how we manage this differently. But regardless of whether we know in advance or not, I think there are 6 key elements that every business ought to be considering as they deal with crisis. Number 1 is the critical communications piece. In 2006, which was really 2 years before the collapse, I went to our entire subcontractor and supplier base and challenged them to make the moves that would prepare them for challenging times, for a recession, for difficulties in our own industry. Many of my building competitors were a little critical. What are you trying to do? Scare the market? I didn't want to scare the market. I just wanted us to be prepared. But I think it's very important for us to realize how important it is for us to communicate, not only with our own team, but with our subcontractors and suppliers. And I went to both newspapers and talked about what was going on. I talked to every economist in the state. And then we tried to make the right, number 2, we tried to make the right financial preparedness. We got ready. We actually paid down our debt. And by 2009, when things were at its worst for the housing industry, we were operating completely on cash. Now, that isn't something that I'm going to be able to do this time because we had 1 month of sort of notice before this thing started to hit us in Utah, maybe 2 if you were really in tune with what was going on early on in Asia. And of course, that time we received no federal assistance. But we did benefit largely from the way that TARP was rolled out and the way the Federal Reserve managed everything. And I had great appreciation for that. Number 3, innovating to overcome. We had to figure out all kinds of new ways of doing business. We realized that our customers had been put through tough times. What it meant is that we had to help them fix their credit in many times before we could sell them a home. We started what we called Ivory Financial Fitness. We knew that people had to have really good consultation about how to sell their home. We organized a group that helped them understand the realistic value if they were going to move from one home to another, what they were going to get out of it. And we made sure that those realtors that we referred to them gave a good portion of their commissions that allowed back to the buyer to allow them to afford to do more and to have more down payment. And there were all kinds of different services that we introduced that were helping us innovate. Every business has to do that. And we tried to meet the market by looking at what's going on in other states that were even more challenged than what we were going through. I particularly focused on Arizona and Nevada because they were like at the eye of the storm. You got to remember that housing was the equivalent of the airlines in this last big economic crisis. But we stayed positive. We tried to move forward with incredibly positive sentiments and feelings and all kinds of promotions and events at that time, which we can't do now, that encouraged our team to stay together, to work hard. and encourage our customers to be optimistic. And finally, we were very engaged in the community and tried to do the right things. Andrea, if you pull up that second slide, I just want to quickly show how things have changed. And the second slide just shows this period of time for COVID-19, which I believe is going to be a 3-year challenge. Like Randy, I do believe we're going to avoid the disaster. We've got enough federal stimulus. We have great management at the Federal Reserve. They're going to help us maintain the liquidity to get through this crisis. But I still think it's going to have an impact. And I'm preparing my business to look at this in terms of a 3-year time horizon. You know, this, no question, is different than the last crisis. And it's more challenging to understand. We have a health aspect and an economic aspect, and we can't really separate those. And as I communicate now with my partners, I'm focusing first on the healthcare side of it. We're talking about hygiene, safety, and all the necessary protocols. And we're only as good as our subcontractors and suppliers. We're talking to them about supply chain issues and trying to, you know, see what we can do in advance of something becoming really a bottleneck that will stop the process. Fortunately, home building is an essential service and needs to go on. While we've had all of our offices shut down and our model homes are closed and available only by appointment, our people that are out on the job sites are going to work for Utah every single day, and we're trying to do all we can in keeping them safe. In fact, on Monday, we'll be talking about new protocols for wearing masks. That's why I had on my U of U mask as we started here today. After we focus on the health and safety issues, I'm also trying to help my own partners, subcontractors and suppliers, independent contractors and sole proprietors, some of them, and I'm helping them figure out how they can navigate and get the stimulus. I was very, very happy to hear Secretary Mnuchin and also Chairman Powell talk about how there would be enough money. We weren't going to run out, that it's still worth people applying, even if they haven't yet, for the PPP or these other loans available through the SBA. And there are huge opportunities for our own small businesses to really pull in some additional liquidity now. And why do they do it? So they can keep their people on their payroll. I'm advising every single one of my suppliers and partners to continue to employ people through these next few months and to use that subsidy to make sure that they have confidence to do it. And we're also consulting with them as needed. We're making our CPA available to them to answer questions. And we're also making recommendations about which banks they should go to. Under the heading of financial preparedness, we didn't pay off all of our debt. We still are operating, but we've sort of put a level of debt that we're comfortable with that we don't think will put it at risk. And for our own industry, I think a 1-to-1 debt to equity ratio is appropriate. And this is a big deal. As we innovate to overcome, much of our new and most recent innovations that are helping us through this crisis have to do with what we're doing online. Virtual tours of our homes, what we're doing to help home buyers still connect with us. The way, just like we're doing today, of holding Zoom meetings where we bring in all kinds of individuals that need to cooperate on getting the job done. We're leveraging technology in every way that we can. And we're meeting the market again. This time, what we've seen, as an example, so far this month, we've sold 20 homes. Granted, normally it would be maybe 2 or 3 times that. We expect there to be some challenges in these next few months, and even like we talked about with Governor Levin a moment ago, some resurgence where we have to be careful. But we're going to do all we can to get every sale we can, and we're never going to stop in our efforts. And what we're doing is doing it through different, more innovative approaches. And our positive marketing right now is totally focused on the spring of hope. Every time we talk with our own team, which is every Monday, we're not only delivering messages about how we're operating our business, but we're delivering messages of hope. We actually are starting a bit of a talent contest this next Monday afternoon where we're sharing various talents amongst our team. And it's been sort of fun. We're trying to spice it up. When we went through the last downturn, we had all kinds of amazing mass gatherings. Obviously, we're not doing it this time, but we're doing it through virtual gatherings. And that's going to make a big difference as we move forward. And our community engagement this time is focused not just on our small businesses, not just on our partners, but also we're very concerned about the homeless population in Utah. Just today, we authorized, some payment to go to the road home to just help them feed their folks over the next few weeks, because they're not able to get the same people in there to prepare meals. And so what we've done is we found a kitchen with some independent contractors who we are going to have providing food for the men's shelter 2 times a week going forward. And we're supporting that through this crisis. And those are just ideas. I know everyone's doing their own deal. I've even had some people say to me, look, I'm not going to apply for the stimulus because I don't need it. I've been saving my money. The money I was going to use to build a building, I'm now going to use to just sort of float my business. I said, you're nuts. Are you kidding me? You've got to use this money now. And the reason is so you don't have to deplete your savings, so that you can, in the next year, start the building that you were planning to start. That's what's going to help Utah's economy. It's going to be key. And I think we've got to just remember, we got to do everything we can to keep people employed right now and to plan on investing. That's why we pull this stimulus in. It's not so that we can just leave it in our bank account. It's so we can keep our employees employed. It's so we can move forward with projects that are advised and that we think we're still going to need. And so anyway, Spencer, I just appreciate you and all that you pulled together with Taylor Randall, and thanks for the opportunity to be involved.
Clark, thanks a lot. I really appreciate that. So what I've learned from you today is, number one, pick a time horizon and plan for it. And number two, be innovative and adjust your business model for that time horizon that you're thinking about. What is it going to look like on the other side of this, and be innovating around that. And as you talked about this being a little bit longer term, some of the things you're doing about, for example, giving people confidence about cleaning your areas and having some real clarity around that for your team as well as your customers. And then also the opportunity to do virtual visits. Number three, help. I think that help is really important. And that went to your volunteering to help your vendors, your suppliers in kind of another parlance, which is really your subs and your contractors, right? But also help your community. And you're helping the community by both in a kind of a civic way, helping with the homeless shelter, but also help by pulling those dollars in, employing your people, and stimulating other jobs in other parts of the economy. And then 2 final ones, work and work smart. That goes along with the innovative one. And finally, be positive, the spring of hope. So that's fantastic. And that's a great segue as we go into the Pynes. Did I get that right, Clark?
I think you got it right on the head. The thing I just suggest to every manager right now is that you play the middle. You don't want to get out on the edges. You don't want to be an irrational optimist, and you don't want to be a pessimist. It's very important, and we have more credibility when we sort of take the middle ground. And that's what I'm trying to do with our team. Don't hype people up. This is going to be over soon. Also, don't be the naysayer. Don't be a doomsdayer. Recognize we're going to get through this. Be optimistic, but also be realistic. Thanks so much.
Thanks, Clark. I really appreciate it. And by the way, you'll note down in the corner on your YouTube, you can always ask questions along the way. We're tallying those, and then we'll come back to that at the end with Governor Levitt. So with that, we're going to shift gears now, and we're going to talk to Scott and Karin Pynes. And I think many of you may know them of Cactus and Tropicals. They both have a deep bench in terms of their experience with business and education. Scott started and ran a software company that he sold into the stock exchange, a publicly listed company back in 1999. And they understand this from a number of different perspectives. And importantly, they lived through the 08-09 crisis. And so with that, I'm going to turn it over to Scott and Karin, who are with us together, and tell us how we're going to save our businesses and navigate through this and vision through to the other side.
Hi, Spencer.
Hi, thank you for having us here to join you today. We feel honored to be with this group. We represent certainly a smaller company. Cactus and Tropicals employs about 150 people, but really we are made up of 3 different companies all put together, 3 related companies. And so most people know us about with our retail. So we have a retail operation where we have 2 retail stores, and where we sell garden and plants and gifts and so forth. And then we also have a plant service division, which takes care of plants. We're actually the plant ladies and plant guys who come to offices in about 1,000 locations up and down the Wasatch Front. And then thirdly, our stores at night, when the customers have cleared out, we have made a business out of providing an event space. So people come and we, a lot of wedding receptions and corporate events and so forth are held at our locations. The reason I talk about those 3 divisions is because really this economic crisis, the pandemic, has affected each one in very, very different ways. And so we are trying to adapt in each of these areas in ways that to help us survive, to get through this thing, and hopefully come out, we hope, a stronger business on the other side. So Karin will talk a little bit about our retail.
Retail is probably the most visible part of the business with our 2 stores. And if you have been to our stores, you are aware that we are taking great pride and work to provide very inspiring environment. That means we combine the plants with garden benches and fountains and pottery. And it's an invitation for customers to come to the stores, to browse, to spend a lot of time there, to bring their family and friends to join us for a class, and to certainly interact with our staff. And so along comes the coronavirus, and all of a sudden, this all has to change. We want to keep our employees safe, we want to keep customers safe, and we want to do, as citizens, we want to do our part to support the stay at home, stay safe message that is going to guide Utah through this health crisis. And we made this very, very difficult decision on March 20th to close our stores. We closed the greenhouses first, and then 3 days later, we felt it was the right thing to also close the nursery. And believe me, it's a very painful thing. It's the right thing for all the above reasons, but it's heartbreaking when you're in the middle of spring gardening season and you have to pretty much cut off your sales. It's bad for business. Our sales plummeted. And here we are now. How are we gonna try to bring some of this back? And so the first thing we did is we reached out to our garden club members, and this is a frequent shopper program. We reached out by email and told them about the stores being temporarily closed, but to continue shopping with us in very different and new ways. So all of a sudden you should maybe just send us email with your plant list, or you can call the store and place an order for curbside pickup, or you order online. And we have had online. We have always had gifts online, and we do really well with people sending flowers to a funeral or an orchid as a thank you. But we have not had every plant on it, every greenhouse plant, house plant, or garden plant. And so from one day to the next, that was our #1 project, to add as many items and new categories too, like kits, for instance. And that was the focus, and this has been successful because we know that all of a sudden we increased web orders
significantly. We went from, our typical was about 15 to 20 a day, and now yesterday we sent out an email and we had about 85 orders come, web orders. So it is making a difference.
So
it's an attempt.
For the team, I think that's super helpful, because all of a sudden they feel that we can be successful. We just got to come up with new ways, and we're going to be all willing to give it 100% support and to move forward. And then there's another change going on too. We do want to switch the layout at the stores. We want to be sure that the exit is separate from the entrance. We want to have a limited number of customers only allowed. And we do want to have a checkout that is safe. And that could be something like a plexiglass, kind of a transparent screen that separates the cashier from the customer. So all those modifications are going on right now. And I think we feel a lot better once the stores are partially opened again. We do understand what Romney calls the stop and start kind of way of doing business for an extended period of time. And so we're trying to adjust to that and hopefully have retail, our sales go up.
So the second part of the business is the commercial or the plant maintenance portion. And you know, as I say, we take care of plants in about 1,000 locations, and they go out every week. And so it's about 4,000 to 5,000 visits per month. And so we have that really working well. I mean, we had all of our technicians had very well defined routes with phones that would keep track of where they were and tell them the next job they needed to go to, any special projects and so forth. And it was really, really running like a nicely well-oiled machine until a couple of weeks ago. That machine just totally stopped. Suddenly, you know, we take care of plants in offices that have been closed, hotels that have gone dark, restaurants that are struggling just to stay alive, and a lot of residences, and of course a lot of residences who don't want us coming in anymore, and so everything was, I think that what really the change that has occurred in that part of the company is an emphasis. We used to have an emphasis on efficiency, trying to make everything work just perfectly well, and now the emphasis is on flexibility, trying to meet our customers' needs as they go through this crisis. And so, you know, we've got a great team who's working hard at figuring it out on a day-by-day basis, but it's a challenge. And so the way we have adapted there is to just try to be extremely flexible and figure out what we can do to help our customers.
And then lastly, we also have the events business, and that is non-existent right now because you cannot have more than 10 people gather, and you know, ideally those would all be one family unit. So the greenhouses host events, and those are wedding receptions, or they are ceremonies. Those could be corporate parties or anniversary parties. There are celebrations of life, and we also teach classes. I mean, all this is down to zero right now. And we understand that this will probably be the last part of the business that will be allowed again, where people will, you know, for a long time have to stay away from larger gatherings, which takes the event business, and there's related business that goes with events. It's like the floral design, like the bridal floral. So that's totally on hold. And
I think as we think about this, we're kind of reminded, we were talking about the last big recession. And we have been through this. So in 2007, I always joke, just in time for the recession, we built our second location, a very expensive building, purchased the land in a very expensive spot, and put a lot of money and effort into building the second location, and we had a great first year. And then as the recession came on, sales started to erode. And we believe it was in Draper, and we believe it partially because we had not had enough time to establish long-term customer relationships. In Salt Lake, it was okay, of course down, but in Draper, it just totally evaporated. And so we got to levels where we were worried whether it could be sustained, whether or not we could go on as a company in that location. And so this was the time when we really started and actively marketed using our spaces for events. And as a result, we were able to get, last year we had over 200 events at our 2 locations. So this became an important way. It was a survival tactic that turned into actually a very important part of the business. It's not the biggest part, but it's a very profitable part of the business. So that was important to us. And I guess, this was our pivot in 2008, 2009. We've talked a bit, I think in some of the previous sessions, we talked about pivots that businesses would do. And I was thinking about this last night, and I don't want to give the impression that, just pivot your business, just do something new. It's not that easy. We know it's not that easy. In fact, but I think every pivot before it was a pivot was an experiment, right? It was, we have to try something, see if it works. And for every experiment that works, we think there's 3, 4, 5, maybe more that don't work. And so, and with every experiment, there's uncertainty and anxiety and sleepless nights and maybe a few peers and people who fight it, and then ultimately somebody who's a champion and makes it work. So I feel optimistic for the small business community that we will come through this. I also believe that it's going to be a lot of effort, some pain in the process. But I do feel like I'm not sure what our pivot's going to be, honestly. We're working much more in electronic orders and so forth than we ever have in the past, but I'm not sure if that's our final pivot, but we'll find it. And I'm hoping that that's the case for other small businesses as well.
Well, Scott and Karin, that's fantastic. Really appreciate you taking a few minutes here to walk us through. Here's what I learned from you: adaptation, and I'll use that as the theme. But you started with keep safe, right? So you adjusted your environment for your employees, and in so doing, you also adjusted it for your customers. And in being able to do the business model that you're doing right now, you're able to also keep the community safe. Number 2, communicate and customer outreach. I just think the word that comes to me as you were talking is connect. And connect with your customer base, especially as you're a retail facing group. Connect with them. And then through your innovation, the next thought is inspire. So as you innovated, you got your customers coming back to you, and that inspired your team. So I think that was an important point. And then be willing to have a shift in your paradigm and your focus. This kind of plays into what Clark talked about, this being a longer term, thinking about the horizon and adjusting, visioning through to the future. And how will what I'm doing today work in the future? And think about this COVID situation being more like a dimmer switch, we've heard it said, as opposed to a light switch. And ask yourself this question. Ask yourself, what will be your pivot? Did I get that right?
Yes, that's exactly right. Thank you.
Fantastic. Well, thanks for being with us. We sure appreciate what you're doing. And hold on tight, because we have questions that will be coming here at the end. We're going to shift now to John Walbrick. John's a pretty amazing guy also, with this wonderful crew that we've had. He's currently the CEO and president of Claris, but we're going to focus today on Black Diamond, a Utah company that many of you know about, outdoor industry company. But his background goes all the way through Mountain Hardware, Spider, Timberland Company. And I would say when you meet John, one of the things you feel is his intensity and his focus and his concept of team and of being strategic and focusing on communicating with his team. So with that, I'm going to turn it over to John. Take us through, show us how you're navigating and visioning through to the future to save your business and grow.
Okay, thank you, Spencer. I sure appreciate it. Thanks to Scott and Karin and Clark. They've touched on many of the same topics that we are going through at BD. For those who don't know, BD is a global business. It is headquartered in Salt Lake City, though we participate and do business in over 60 countries. We do have offices and facilities in Austria, China, and of course here in Salt Lake City. We have over 400 employees, and we focus on resourcing and developing manufacturing products for wholesale, retail, and for distributors. The first thing I would say that we took on very early as a theme at Black Diamond is the statement of be safe, be strong, and be positive. We believe that confidence is a driving force here, and it's an important message to all of your employees. You will come through this. The second thing we really pushed on in our organization is control what you can control and not worry about the things you can't control. Focus on the results that you can execute. We then focus that on one, define your business, answer the why. Use this pause to redetermine what it is that you do best in the business and execute that with excellence. You will look back at this time and it will be viewed as a Forrest Gump moment for your brand. And if done right, it will become a driving, or as Karin and Scott said, a pivot point for your business. We believe that great teams build great brands. And so it's really important to keep positive and to strengthen your employees all the time. Use the stimulus package, the triple P, to protect your employees. That is why it is there, and it'll be the strongest both builder to your employees, but also helping you to sustain through the short-term crisis. What do we do? First and foremost, we always say at BD that people only care about what you know when they know that you care. And that's a really important driver to this. Use this time to put your people first. And I don't mean just your employees, but every people that you work with. Communicate to all. Go out and talk to your employees on a regular basis. And in this manner, confidence in your communicating creates consistency. We've gone out and spoken to all of our suppliers. We've gone out and talked to all of our retailers, our distributors globally, our sales reps, which are all over the world on a regular basis. We also reach out on a regular basis to our consumer, and a great time to use social media, as both Scott and Karin has also said, and focus on whether it's digital media to them and communications through Instagram, Facebook, YouTube, however you can communicate to that core consumer. Plan for the future. Really focus on innovating and accelerating your business during this time. You will get through this, and the time in which you invest in that business today will be very valuable. How do we do it? As we said, we focus on our employees and coaching and teaching them through this process. They're the most important asset in our business. Define your leadership in action. This is an opportunity for you to define your leadership, not only with your employees, but also within your business, and make a statement. To build your loyalty with your best consumers and drive that forward. Again, all defining why you exist in the business today. Think about how you go to market on a regular basis. How are we perceived by our consumers, by our retailers, by our suppliers, everybody? How are we performing, communicating, and performing in their manner? What we don't do, and I think sometimes in a business environment, it is important to define what you don't do as much as it is to define what you do. Use this time to define your business differently. Don't copy others, as we always say at BD, and don't make short-term decisions that will impact your long-term business. You will be out of this. Look for those pivot opportunities. And as Clark said on Ivory Homes, we really focused on positive marketing. Slide number 2 shows that we will all be out there with you again. And this is a message that we share, everywhere around the globe. This idea of live now, climb later. This is a time to focus on more important things, but the rest will come, and eventually we'll all go back to a bit of normalcy, and our businesses, our friendships, our families, our relationships will be stronger for this. And that's my biggest conclusion: is use this time as a Forrest Gump moment for your brand. Define what you are, execute with confidence, and focus on the things you can control. So hopefully that helps.
That's fantastic. Thank you. So here's what I'm seeing, and here's what I learned from you. we have three very distinct businesses that we're talking about. Two of them, all three of them maybe are similar in the fact that they have a customer facing component, but I guess all businesses do, you know? And, you know, the idea, be safe, be strong, and be positive. This theme that you drive through your business with not just your customer base or not just your team, but that is your culture, and that pervades you, that permeates out into your marketplace. And this idea of being positive, as you illustrated, I think that goes out to your customers, that goes out to your team, and it keeps people moving forward. And so this idea of having a vision and a plan for the long term is what I hear you talking about. The other idea of focusing on the things that you can control. Let's do that. And then take advantage of your opportunities, whatever they may be. It might be the federal stimulus package, or there might be other things, but take advantage of those, spend the time to get on them, get the experts around you, or reach out to somebody that might be able to help you to get that done when you feel overwhelmed. And then again, this theme of connection. I think with your brand, Black Diamond, and you know this slide that's up where it's, you know, we'll see you out there. Just connect with your vendors, with your customers, and your people. And then one of the things that you said that is similar to what Scott and Karin talked about is this is a pause moment. You've said to me, this is a time to act as though you're a brand new startup. How would you, if you're creating the business today, how would you create it? And that's essentially what we have to do. We have a new paradigm in the world, and we're dealing with a crisis now, but it's going to be different when we come out of this. We don't know quite how it's going to be different, but what is that company? What do you want your company to look like when you come out of it? And I think that's the theme today that we're trying to get to. Did I get that right, John?
You did. Thank you very much.
Great. Well, thanks for being with us. I'm going to turn the time over to Governor Leavitt now. And Governor, you're the one who planned for these pandemics. What are your thoughts? How do we move forward?
Well, I'm confident based on what we heard today, we're going to see businesses survive in Utah, and I'm happy about that. I think we've only got about 10 or 12 minutes left. Andrea, do we have questions from the chat?
Yes, we do. Here's a question, just general advice on how businesses can lure customers back. There's some folks who are worried about that business won't return back to normal anytime soon, but they know they need to retain employees for at least a year with some of these government programs. So any ideas about how to start engaging with your customers?
Clark, you in the home building business, I'm sure that was a concern to you. Why don't you give us some thoughts on that? I'd love to hear the others as well, briefly.
You bet. You know, I think the thing I'm telling my people is call every single client, but be very careful not to get into your own agenda. The very first thing I want my sales consultants and my designers to talk about is, how are you doing? You know, tell us how you're doing. And if we can just listen first and find out the circumstances, we will become closer friends with our, you know, customers, and that relationship will prove out later. So finding out what they're doing, finding out if they have any real needs that we can help them with, and then figuring out how we can respond to them. I just asked my entire design team, who's been holding these meetings, one-on-one private showings at a distance, sometimes virtual tours, where people are selecting all their colors for the home. I asked them to go through a couple of hundred of our clients who are in this process and to survey every single one of them and to find out sort of their status so we knew best how to help them. I think understanding the backlog of your customers right now and what you need to do for them is very important. And those customers that are not ready to buy, you maintain the relationship by showing that you care, even if they're not ready to buy right now, because they will be our buyers in June and July, and we need to maintain that relationship.
Great summary. Stay in touch, stay close, and they'll stay with you. Andrea, let's go to another question.
Yes. How are the businesses dealing with vendor payments when cash flow is likely falling significantly? Are you doing things like deferred payment plans, or how about customers who are slow to pay? How are you maintaining those relationships?
Scott and Karin, any insight into that?
Sure, it's a tricky
Yeah.
time right now. I mean,
Good question.
we are absolutely amazed. We have contacted many of our vendors, and we're just amazed at how cooperative everybody is being. And then we are just passing that cooperation right on to our customers as well. In fact, in the last billing insert we did, we put a thing that said, if you're going to have a hard time paying, then just email us, let us know, and we will work something out. You know, we do not want gaps. We want, when this whole thing is over, for our customers to stay our customers. And so it's a tough time right now, making our way through.
Well, I have to say, I work a lot on the buying. I do a lot of the buying, and I was personally one of those people who made calls to vendors, and I only had good experiences where either we did ask for a delay in payment, or we did cancel an order, or we put orders on hold. And I think that's what a crisis does too. It brings everybody together and to work something out.
John, everybody has a customer, everybody has a vendor. Are your vendors treating you as well as you're treating your customers?
Yeah, I think it's really important in this situation. We always say that character is defined by how you act when no one is watching. And I think everybody knows the situation. You can be openly honest with your vendors and your customers along the process. They'll appreciate it. Communicate with them on a regular basis, tell them what you can and cannot do, and that they are a priority. I think if we ignore it or hope it goes away, that's, you know, creates the lack of future, I would say, with your vendors or partners. But they're all in the same boat. They all want both sides to survive. And I think the more you communicate and discuss and plan out with them, even if it's delaying the payments for terms, we do it on both the supplier side, but we were early to go out to our retailers and say to them, look, we know you're going to have a difficult time. We know it. So this is all the things we're willing to already do up front, and they have appreciated that. And I think leadership, this is an opportunity for your business to take a lead in having this discussion.
Thank you. Same conversation we had about bankers. Call them up, tell them your situation, ask for them to be your partner. Often vendors are creditors too. Andrea.
Yeah, Clark, you talked about not being an irrational optimist or a doomsayer, being in the middle. The question came up, how do you communicate to your leadership team, and how do you help that permeate throughout your organization?
So we do a manager call every week, and we not only do we talk about how we're managing our business, but I've been sharing with them all the developments that go along with the plan that the state's created. You know, Utah Leads Together, and that's been very helpful for us to sort of synthesize everything and to talk through things just like that plan outlines. You know, that we have an urgent phase and what that means, and then to have a stabilization phase and what that means. And particularly with my managers, we're spending time talking about what we're going to do in the urgent phase, how we're going to transition when we can sort of go from red to orange. And then when we're into stabilization phase, I'm trying to get everyone to understand that this will be a gradual change. It won't be like a light switch. And so we're going to have to ease into this thing. And I'm getting everyone to sort of think that this is not going to be really quick, and we're going to have to make incremental adjustments. And it's very important to have that discussion with your managers. And so we do that call once a week. And then I actually meet with my sales team once a week and with the sales manager, because I have to be really closely in tune with what their customers are saying. There you go.
Great. Transparency. I heard that theme. We hear that theme throughout this conversation. Andrea, let's go to the next question.
Yeah, this one's for Scott and Karin. You acted quickly to adjust to the crisis. How do you balance speed with making the right decision?
probably not quite as easy as that. I mean, we are trying a lot of different things, and we, as I say, this is kind of our theme. Everything's an experiment. We try it. If it doesn't work, we don't talk about the ones that didn't work. So I think moving fast is important. I think we have to, but we also are worried long term about changes in customer behavior that may last 2 years, 3 years, or be permanent. And so yeah, I think it's always a balancing act between moving fast and being careful and limited funds and all of that.
I also want to say retail has always had a difficult time. I mean, for a long time now, online sales have taken over retail sales, like brick and mortar. And so we have always tried to be very creative and innovative as far as retail goes, and always be fresh and new.
Well, thank you. Andrea, let's keep the questions coming.
Great. This is a question for John. We were inspired by your comments, and I'll acknowledge that this is a crisis of confidence, yet you seem so confident. How do you find and convey the same level of confidence?
I think one, realizing that this will pass, and that, like I said, it's a pause moment, and it's not the first pause moment that any business has been through or situation. Clark talked about it, from going through the housing crisis from 2008 to 2011. You think about what Scott said and Karin in regards to investing in a new store location and then getting smacked by a recession and having to figure out how to look forward. They all got through it. We will all look back at this, as we refer to them, as Forrest Gump moments in the brand. I think if you have a clear vision of where you're going to be in the future and you execute against that on a daily basis, and we say every person, every day matters, and they build up over time to execute in your long-term vision. I think where the lack of confidence comes in is if you start trying to guess what the future is when you don't have any control over what the future is. What you have control over is how you motivate, coach your employees today and how they react on today. And the joke recently has been that through this work from home crisis, we've moved into a 3-day work week: yesterday, today, and tomorrow. And you have to think like that. What are the things that I can do today for tomorrow on my business, and not get so caught up on things months out, years out, that I can't control. But the things I can control, execute those with perfection, and we will get through this.
Great comment. Anything to add to that, Clark?
I love what John has to say. These are great small businesses. And I think the biggest thing I have to say is that we realize now that we're more connected than ever before on a worldwide basis. We also realize that we're more connected here locally in Utah. I feel more sort of a kindred spirit towards all of my other fellow Utah businesses than I have ever felt. We are in this together. I want every single small business to be able to get their piece of the federal stimulus so that it can help them and that they can stimulate our Utah economy. I want to just see every business benefit. And I think those businesses that are strong enough, that really have a strong balance sheet, now is not the time for us to, press our subcontractor suppliers, our partners to the edge. It's the time for me to be the fastest I've ever been in paying I have, 300 employees, but I have 3,000, people working on our job sites every day that are subcontractors and suppliers. I need to make sure those businesses are taken care of, almost like my own. And if I do that, those businesses survive. And what it means is we survive together. And surviving together is a beautiful thing, because we're going to come out of this and we're going to feel more united than ever before. We're going to feel like we have great partners. And the state of Utah, which has done so well over the last several decades, really since you've been governor, is going to continue to prosper because we do partner, because we do collaborate, because we do come together in the time of crisis. And we're seeing that happen. at the very top, but all the way down into the trenches. When I meet with my subs and suppliers each Monday, and I hear the stories of what they're doing to help their employees who are just scraping through some really difficult times, I am just so proud of these guys and the way they're running their businesses and doing the right things. They're not self-centered. They're not selfish. We're all in this together. I think that's the message.
Thank you, Clark. Very positive.
Governor, you're on mute.
Thank you. I thought I'd taken it off. I'm going to just say, I think this sense of unity we feel is important, because it is through that sense of unity that's literally sweeping across America. We are united against a common enemy. Who would have thought 30 days ago that Congress could unite in less than a week and do something as profound as they have? Who would have thought that people would have been leaving their businesses to defeat this virus and to keep us healthy? This is a proud and remarkable time in America. And with that, I want to say to the business school and to the Eccles family how appreciative I am, and I think Utahns are, for the ways to save our business. Taylor?
Governor Levitt, Spencer Eccles, thanks for being fantastic hosts for us today. Our business panel was inspiring, dynamic, and also intensely practical. I want to remind all of you that we've got another installment of our series here on Tuesday. We're going to be talking about cash. Cash is king. We're going to have a seasoned chief financial officer who's been through some cash wars that you can't believe. We're going to have an attorney that's going to talk about the boundaries you've got when you're deciding to pay or collect. We're also going to have a banker who is going to go through a few of your options with banks as you're trying to perhaps restructure loans to make sure your cash comes through this crisis. Anyway, we appreciate all of you. Special thanks to the George S. and Dolores Dory Eccles Foundation for underwriting this whole effort. Keep your wits about you. We're going to get through this together. Thank you.